Good evening and welcome to today's market analysis. Let's start with yesterday's closing data. The Nasdaq finished at 26,343 points, the S&P 500 at 7473, and the Dow Jones at 50579. But more importantly, the VIX Fear Index has climbed to 16.77, signaling a clear rise in investor anxiety. The 10-year Treasury yield dropped to 4.49%, as money flows out of equities and into safe haven bonds. The dollar index is hovering around 99.13, with the offshore yuan trading in a narrow range between 6.78 and 6.80. In commodities, WTI crude oil has risen to $92.72 a barrel, while spot gold stands firmly at $4,521 an ounce. Bitcoin slipped to $77,060, failing to act as a safe haven and instead moving in line with risk assets. So what is the main theme for today? In one word, fragile. The probability of a weak and volatile session is about 70%. Why? Because geopolitical risk is now the dominant variable. The uncertainty surrounding US-Iran negotiations has directly pushed up the VIX and triggered a sharp sell-off in European markets this morning. The French CAC 40 dropped over 1%. The optimism we saw in Asian markets was completely disrupted when it reached Europe. This suggests that when US markets open tonight, they will face selling pressure from Europe and the direct impact of geopolitical tensions. Let's break down the macro drivers. On interest rates, the drop in the 10-year Treasury yield is a classic signal, which is negative for equities. The dollar index has not reacted strongly yet, so it offers little directional guidance. On inflation, rising crude oil prices are fueling global stagflation fears, putting pressure on corporate profits and consumer confidence. And geopolitical risk is the biggest source of uncertainty today, directly weighing on the market. The capital flows are very clear. The first main theme is betting on geopolitical risk premium. This means going long on energy stocks and paying attention to gold. As long as there is no clear easing in the US-Iran situation, this logic will continue. The second theme is defensive rotation within the stock market. Money is moving out of overvalued tech growth stocks and into low valuation, more stable sectors like financials and utilities. There are two key trading triggers to watch today. First, any official statement from the US or Iran, whether about military action or negotiation progress, will immediately cause sharp reversals in oil prices and stock index futures. Second, the first hour of US trading is critical. If the S&P 500 can hold above yesterday's close of 7,473, it would show more resilience than expected. If it breaks down quickly, it could trigger program selling and accelerate the decline. Of course, we also need to watch the risk factors. If there is a dramatic de-escalation in US-Iran tensions, for example if a deal is reached or a misunderstanding is cleared up, all the current logic would collapse instantly. Energy prices would plunge and risk appetite would return quickly. Also, if the Federal Reserve unexpectedly delivers a dovish message, hinting at slower tightening or earlier rate cuts, that could also shift market sentiment. Given all this, today's strategy should be hedging. The market signals are contradictory and volatility is rising. It is not a good time for directional bets. We recommend a market-neutral approach or building hedge positions. As for entry conditions, do not open new long positions at current levels. If WTI crude pulls back to around $91, you could consider going long. Alternatively, if the S&P 500 rallies to 7,500, you could establish short index hedges. If the VIX breaks above 18 and crude holds above $94, you can add to energy longs and equity shorts. But if there is any sign of a US iron, or if the VIX falls below 16, you should immediately reduce your positions. Let me give you a few verifiable predictions. The S&P 500 will likely close lower today than yesterday. In China's A-share market tomorrow, the CSI 300 will continue to outperform the Chi-Next index, with defensive style persisting. Bitcoin will not break above $78,000 in the next 24 hours and will test support at $76,000. WTI crude may reach $94 a barrel in the next 24 hours. And the VIX will close above 17.5 today. Our probability assessment for today is 15% up, 45% sideways, and 40% down. The market is searching for direction amid rising sentiment. Stay cautious and manage your positions carefully.